know, how many of you know, how much do you pay for a tablet of crocin? Very few of us would know how much we pay, right? That's because we don't care. It's crocin. We need to take crocin when we have fever. So branded generic companies in pharma are actually more like FMCG companies. They brand, they sell, they barely ever manufacture what they sell. They actually get it manufactured by third parties, and they just brand and sell. And their balance sheets are beautiful to look at. Their cash flows are amazing. ROEs are more than 30%. And that's an amazing business, and we really like that business. The third bucket is the API plus chemical plus contract manufacturing business, which is where the industry has been sick for the past 25 years because of China, basically Chinese competition. And now, with China plus one, what Sameer said and Vikas said, so China plus one, this industry is not just coming back. We know of companies that are trebling or quadrupling capacity in a period of 4 years. Just to give you an example, DV's Labs, a company that started in 1982. If you look at their 2017 balance sheet, the gross block is about 1,800. By 2023, the balance sheet will have a gross block of 7,000 crores. So a company that did an average capex of 50 crores for 35 years is doing an average capex of 1,500 crores for 3 years. So you can imagine what they are going through in terms of their order books, right? So we like that bucket a lot. The fourth bucket is hospitals. How many of us here know that apart from FMCG, hospital is probably the only other business that has a negative working capital? The significance of a negative working capital, Vallabh, is that you make more cash than your profit when your profit grows. If your profit grows by 100 rupees, your free cash flow actually grows by 120 or 130 because your working capital is also giving you more cash. Now that's the beauty of that business. And historically, people have avoided that business because historically it was asset heavy. Hospital operators wanted to own the land and building. Now they don't do so anymore. They lease it. Now, because they lease it, it's now asset light. ROEs are fantastic. Cash flow has always been great. They've deleveraged their balance sheets like many other companies in other sectors. So the prospects are looking great. Last bit of sector, which is the diagnostics, and probably the most debatable pocket today, given what has happened in the marketplace recently. So we like diagnostics. It was always with pricing. So a Dr. Lal, a Metropolis, premium pricing players, right? And they give you the service. They ask for the price. You pay the price, you get the service. Currently, with this low price competition from online platforms, aggregators, yes, there is pricing pressure on them, but you have the option of betting on low price traditional format players like Krishna Diagnostics, like Thyrocare. Now, which is where we have our bets, because we don't want to take the price risk, but we are very, very confident on the industry itself doing extremely well. 85% of the diagnostic industry is still mom and pop stores. Only 15% is organized. So when you see new competition coming, you should not be bothered about the incumbents. The incumbents are not going to lose business to the new entrants. It's the unorganized stores which will lose business to the new entrants. And that is what will formalize the industry. It's actually good for everyone that happens. So we look at it in these 5 broad buckets. The 6th bucket is obviously allied. So you have insurance, you have medical device manufacturers, you have many other allied industries, and there are various, bottom-up plays there. But that's broadly how we look at healthcare. And in terms of the next decade, I would say the future for everything else than unbranded generics, which is the largest bucket. So future for everything other than unbranded generics looks absolutely great because it's all dependent on India. If you look at the US GDP breakup, consumption breakup in 1950, GDP consumption, that is exactly where India is today. And US, after 70 years now, is consuming about 17% of their GDP in healthcare. We believe that's where India can be in 70 years, but in 10, 20 years, the 3 can be 5 or 6. So if your GDP grows by 10, 12%, your healthcare consumption will actually grow by 15, 18%, because as a percentage of GDP also, your healthcare is growing. So therefore, we are extremely bullish on healthcare as a thematic.
Wonderful, sir. I think this gives us at least an overview of what all segments are there. Pet and drug, branded generics, hospitals and laboratories are the sections or segments which are available in healthcare industry. And as we move forward, we'll brief you more about all these sectors. Moving on to the next question, Vikas sir, this is to you. And I'm going to pose this question like a news anchor posts this so that we feel a little better. High net interest margins, low non-performing assets, comfortable capital adequacy. This is where we are in our banking industry. Do you see that banking sector is ready for the next decadal growth?
I think, very, very important question, and I think very, very we recently wrote a very detailed note on that, that the title was "This Time It's Different." And we truly feel that, banking has gone through a very significant change this time. If you go back and check what has been the historical problem of our, banking sector, it is only and only NPA, right? Time and again we get NPA cycle, right? Now what has changed on that front? Let us, see that. India had three broad credit cycles, right? In 1999 to 2001 cycle, where the NPAs were 14% at the peak of the total, which essentially means banks were bankrupt, right? That time, large part of the borrowings were only corporates, right? We didn't have any sort of mechanism. Then the 2002 onwards, corporate retail lending started happening. It grew almost 8-9x, and private banks took the lead. That time, again, by the time 2008 crisis happened, retail NPAs again reached to almost 10-11%, and ICICI Bank and HSBC lost a lot of money in the retail side. Then third one happened was 2011 to 14 cycle, where again, corporates defaulted, we all know that, in the power sector and this and that, and again, NPA cycle reached to 11%. But every time if you just think, we did not have any infrastructure. Last time when the retail cycle happened, we did not have CIBIL infrastructure. So, CIBIL got introduced in early 2000, but by the time it got implemented and started being used, 2008 it was not ready. But in the next cycle, everybody is using CIBIL score. So today, nobody wants to mess up with the CIBIL score, whatever economic data you are, right? It means even in the middle of pandemic or anything, after that cycle, we did not have any retail massive NPA cycle. So, economic up and downturn related banking system is able to handle. But anything related to fraud and, where you don't have infrastructure to manage the credit score, it was not there, it is there. So retail is, in my opinion, very, very well placed. Coming to corporate cycle, before 2014, we did not have IBC infrastructure, right? We had SARFAESI and debt, that BIF, they were not effective, right? And we all knew that everybody could get away with the system. Today, with IBC, we all know that how most powerful people in the country have lost their corporate assets. Today, there's a fear of God in every businessman that, I don't want to do anything hanky-panky, do business right way. So I think as long as you are able to eliminate frauds and, those kind of systems from the business cycle related NPAs will come and go. And that, I think, banking system is very capable of handling. So if you see on the asset cycle, these two infrastructure which is available. And third and big thing which has happened, earlier, credit assessment would happen based on the data submitted by borrowers. Today, banks don't need data from you. They pull out data from GST of your sales. They pull out data from income tax for your income tax track record. They track a lot of data, right? On the individual level, because of technology, they can even track your SMS and read what is happening, and through that they do credit assessment. So today, the data availability for the credit assessor is far, far, far better, and hence they are able to assess your risk and price that accordingly. So there's nothing wrong in giving a loan to a high risk player as long as you price it well. So if I'm giving loan to somebody at 20%, I factor 5% default and I can still make money, right? So I think what has changed is ability of the banks to do assessment, credit assessment better, the availability of the infrastructure, which will discourage the NPA, especially through the fraudulent way and, generally discouraging the NPA. I think these two things have made banking very, very robust. The effect of that has started being played now. So first we have got rid of our NPA cycle, or at least reduce our NPA cycle. Now going forward, I think the growth is coming back. Like point I mentioned that, after long investment cycle has started picking up. So next leg of our balance sheets are one of the lowest leverage in the world. So now credit growth has started picking up. So if we see 18-20% credit growth over next 4-5 years, that kind of wealth can get created. And every cycle, credit growth, if you look at the previous cycle, it starts with early at 11, 12, 13% and peaks at 25, 26%. So I think we are somewhere in a very early stage of banking cycle recovery. You will see many NPAs which were written off will be written back because, all were lent to against assets. So they will recover more money than they have written back. So you will see all those positive things playing out. So I personally feel in next 5 years, the sector which will create the largest amount of absolute wealth probably could be banking. And, even in terms of percentage could be probably banking.
Super. I think in banking sector, most important part is that NPAs, where sir has pretty well explained how digitization of economy has enabled bankers to assess the risk very well. And that is how we see the banking sector, as Vikas sir told us. Moving on to the next question, Samir sir, this is a tricky one. You manage a fund where you get the funds when the return comes. And that's the time when all your thesis has played out, and you don't get money when the fund is not performing. How do you manage your allocation in this dicey situation? And how do you allocate money during these times?
So fortunately for us, what we have seen is amazing level of maturity amongst retail investors. So, 10 years ago, like when our market used to fall, we used to get calls that, will it fall further? Shall we redeem? Now today, markets are falling by 10% and we are getting call, is it time to put more money? So unbelievable amount of maturity. So we have always communicated to investor that if you want to come to small cap space, come with a long-term view, kind of, and invest in a systematic manner because the market's really volatile, kind of. So frankly, we have not seen this kind of volatility, fortunately, in our fund. Bad times, good times, I think investors are getting more excited when times are bad, kind of. So unbelievable level of maturity. And I think this small cap, I think this is a game of nerves. So basically, I think best time to invest in small cap is when there's a panic on the street. Something worth 100 rupees, you're getting for 50 rupees. So that's where we should be excited. So the return of the fund will be determined by what you did in the bear market, kind of. So, COVID is a perfect example. We've seen one of the worst bear markets for a very short period, of course, during that time. So, there's one of the greatest opportunity to buy the stock. So what do you do during this time? So we always tell investors, if you want to come for a small cap, get your allocation right. Because however bullish you are on small cap, don't put 50% kind of allocation. You put that kind of allocation with which you can withstand, And small cap can be a very volatile category. Tomorrow, if something is going wrong in the world or India, say tomorrow there's India-China war of large scale. And believe me, small potentially can fall by 30-40% within 1.5 months. So put only that much money in small cap with which you can withstand that kind of fall. Because if you exit small cap during the bear market, and that's the biggest mistake you can do. So I think get your allocation right, and in fact get more excited when there is a bear market or when there is a fall in the market.
Super mantra for small cap investment. Keep your allocation right, and when there is a panic on street, that's the opportunity that you have to grab with both hands. Thank you, sir. Moving on to next question to Delin, sir. You have been managing a transportation and logistics fund. And globally what we have seen is that outsiders have disrupted this industry. How do you see Indian corporates behaving in this disruptive sector and how they would change, or will there be outsiders who will again disrupt the Indian transportation logistics?
No, I think that's a great question. I think globally, when we've seen the evolution of electric vehicles in the auto industry, I think it all started with Tesla, and that was the name that we've all been most familiar with in terms of how the sector has evolved over the last decade or so. Outside of that, I think it's the Chinese companies that did take a lead, but their dominance has mostly been in their home market rather than anywhere else in the world. And we keep hearing from many auto promoters that what the Chinese do and what they make is unique to China. So I keep remembering some of those statements, and it's not really comparable to what we see elsewhere in the world. So I think that's the first part. I think the second part is, India actually, to me, has actually surprised us on the EV journey. If you think about, if I were to ask you 5 years ago, who would you think is the first car maker to launch electric vehicle in this country, on a reasonably large scale, I don't think any of us would have said it will be the Tatas. I highly doubt. In fact, I think 5 years ago, we almost thought Tata will close their car business, right? So I think the entrepreneurship and the cost structure and the ability of Indians to re-engineer and reverse engineer has actually come to the fore. Because in the four-wheeler space, it's the Tatas and Mahindra's just launched their vehicle that have actually come, pretty much first with an India-built product. Of course, there are imported components, but really with an India-built product. Whereas companies like Hyundai have come with an imported, product. So India has probably taken a slightly different path at this point of time. That's the first part. And the second part is India has also taken a path in the four-wheeler space where cars are affordable. You see, the Teslas of the world are at $40, $50, $60,000 a car and upwards, right? So they actually came into the premium end of the segment. Whereas India has actually tried to get into the mid-level of the segment, right? They'll probably come lower as the cost structure improves. But I think that's where the Indians have been slightly different, and we believe, they've kind of cornered some sort of opportunity at this point of time. If we move to two-wheelers, unfortunately, the journey is slightly different. I think that's where we have far more competition. It's probably a simpler product as well. But we think the incumbents will definitely challenge much harder than what we've seen in the first, let's say, 2 or 3 years of this journey, right? And I think as regulations become stricter, it's going to be tougher for the newcomers to actually compete on a very large scale. And I think this recent discussion that we've seen in the paper where subsidies have stopped being paid to companies who have not localized as they were supposed to, is a step in that direction. So the market is worried. It reflects, I think, in the multiples of many of these companies that there are a lot of technology changes happening. It is tough to predict a single winner at this point of time. But I do believe that some of the Indian incumbents, do have a reasonably large step forward in probably emerging as, one of the larger players in the ecosystem over a period of time. So I would not write off, any of the existing companies at this point of time.
Perfect. So China doesn't have the right quality, US doesn't have the right price, and that's where we have the advantage. That's what I can understand when it comes to the auto sector. Moving on, Vikas sir, I am going to combine one of the WhatsApp questions with the question I have. And all of you listen carefully. Apple wearable devices, that is iWatch, AirPods, AirTags. This segment was started in 2018. The revenue from that segment is $25 billion today. TCS started 50 years ago. The revenue of the company is $25 billion. A segment which is 4 years old and segment which is 50 years old. I want to elaborate on the Indian tech industry, global tech industry, and if I want to combine this, if you were to put your money in India, US and China, where will you put and what would be your allocation?
This is quite a big question, but so first of all, I think both global IT and Indian tech, both are two different ball games only. There's no comparison. Global tech, as we know, is mostly whether it's Apple, Microsoft. They are more consumer driven, more focused. Of course, the largest consumer company in the world and the best brand in the world. So both are two different. Comparison is not. Of course, they use technology, but the Indian IT services does pure coding, software. Of course, it is also going, it started with the pure labor arbitrage, and now Indian IT services also evolved into having fairly large ERP, solutions and transformative contracts they are doing. But still, it is, at the end of the core of it, it is services. So even if, let's say companies like Apple, Amazon and all, they all spend a lot of money, Google spend a lot of money using Indian IT services for outsourcing a lot of their work. So both have different, and I think the lever for Indian IT services is how much more and more outsourcing, global companies need to do. And that market is, as per various estimates, is set to grow at anywhere between 10 to 12%. Now, in that also, there is outsourcing which is done by to the third party and to the captive players. Many companies have their captive offshore units here where they employ thousands and 10,000 people to do outsourcing. But Indian IT services, I think, in my opinion, is well set to grow because I think the labor arbitrage still remains there, US cost is there, and today also there's no comparison to Indian capability on that. If, let's say, Microsoft goes and sells cloud solution to a company in US or Europe, anywhere else, who will implement, who will lift and shift the entire database from the traditional or the conventional system to the cloud? Somebody has to do that dirty job, and that dirty job or whatever job you can call it has to be done by somebody, and that is what Indian IT services companies done, and nothing wrong with it because we generate huge amount of employment on that. I mean, IT services hired this year about 10 lakhs people, which is more than put together last 7 years. So that's the kind of employment which generates, and India needs that employment. And if on an average 5 to 7 lakh rupees salary you get, it's a huge boost to the Indian economy. So both are very, very sort of different businesses. We should not sort of compare. And most of the US global tech companies are global in nature and they tap global markets. I have a view that, and I may be wrong, of course, most of the global tech companies are corrected, but I have a view that most global tech companies are going to face monopolistic issues, some point in time. I think they have become too big to kind of, and we've seen how Google had to be split, and, so all those things will happen. And somewhere there's a very big this thing, because today they control our lives, and there's huge amount of regulatory, thing happening, that how to control that. It has political ramification, it has economic ramifications. So I think if I take, let's say, 10-year view, I don't have a 2-year view, how will it play, but if I take a 10-year view, I think many of those large tech companies won't, remain of this size, and it's a very sort of radical view, but I think, so hence, if I were to take the call, I will not put money into global US tech, especially when, and your question that US, China versus India, I personally believe that India is a market. If again, I will repeat that, if I look at my 25 years of history, I don't think so many factors have come together, which is right now happening in India over the next 5-7 years can play out. So why to kind of go back and look elsewhere where, we have our home turf, where money is being made on a risk-adjusted basis, versus taking a clue on China, where we have no idea what's happening. Political system is there, which is opaque. If just think about what happened to Alibaba, if that happened to Reliance in India, what would happen, right? But, it's the amount of wealth which got destructed there is obscene, right? So why to, and I know it is fashionable to kind of invest into money overseas these days, but I am personally a big believer that, diversification for the sake of diversification doesn't help. I mean, you can do diversification, within multiple asset classes. So, US has its own problem. I think it will remain in a recessionary phase for some time. So I would still not play a contra play on US. Of course, US economy is a resilient economy. They will come back. But I think still a lot more issues will be there. China, again, I'm not really very sure that, because they have to rebalance their economy, they have to increase their, consumption still. So still, I guess, a lot of issues are there. I'm not a big believer. Of course, there's a value, as far as a lot of value investors, and I'm not expert in China, but a lot of value investors tell that China offers now deep value. Now, if somebody understands that, please deploy, but I don't understand. And I personally think that diversification for the sake of diversification is of no good use.
Wonderful, sir. Thank you very much. Thank you. The next question to Aditya, sir, is hospitals and hotels. We end up paying the rent for that particular room. What's the difference?
Yeah, I get this question quite often. So you're right. I mean, see, hospitals and hotels both give out rooms on rent, right? And that is how people look at it. But bear with me for 2 seconds here. So once you go to a hotel, it's your choice as to how many nights you will spend at the hotel. Once you go to the hospital, no longer your choice. Once you go to the hotel, it's your choice if you eat at the restaurant. Once you go to the hospital, you're eating that food and you are buying that medicine from their pharmacy, which they buy, by the way, at 20% of the MRP. And they sell you at 100% of the MRP. Once you go to a hotel once, the next time you're in the same city, you might want to go to a different hotel just to experience a different property. Once you have gone to the hospital and you're lucky to come back alive, next time you have a problem, you're going back to the same hospital because the doctor is there, your medical records are there. They know what happened last time and therefore they can treat you better this time. So no, I completely disagree that hospitals and hotels are the same. Actually, if you look at it that way, none of the hotels have negative working capital, and all the hospitals have negative working capital. Very few hotel stocks do double-digit ROE. All hospital stocks do double-digit ROE, barring one, which is under a different issue. So I would say hospitals are a completely different business model, much more non-discretionary in nature. So even under COVID, right? So all your hotels were closed and you were not allowed to visit. Hospitals were closed for a very brief period of time till they could figure out what the SOP needs to be, because the nurses and the doctors were required to be protected from the disease itself. So they had to ensure that the SOP is in place. But once the government formulated the SOP, implemented it immediately, all hospitals were open during COVID. and we all saw the beelines, right? I saw 10 Mercedes in a row with COVID patients sitting inside and no beds in the hospital, and all these guys are just waiting for the bed to get empty. You will never see that in front of an hotel, no matter what happens in this world, right? So yeah, long answer short, hospitals make majority of their money by giving you treatment, by giving you a service which helps you to survive. Hotels help to entertain you. So that's the basic need, which is sort of different.
Wonderful. Thank you. Thank you very much. Samir sir, moving on to the next question. Small cap tend to be multi-baggers. And what is the process you run to evaluate these companies and invest into them at right time?
See, as I mentioned, in small cap, you have to invest for longer term. And one cannot trade in small cap the way one can trade in large cap, because liquidity is not there and impact costs are high. So only good way of making money is think long term. So it's very simple. Like whenever one wants to get into any long-term association, I think one has to be comfortable with the other person. So I think the first and foremost thing which we decide whether we are comfortable with the promoter or no. That's very important thing. So person behind the company. So if person is good but business is not good, then also that's not a good situation. So after person, the next thing comes is the business. So business has to be fundamentally good. And the third thing is the valuation, because you have good business, good promoter, but if you buy at a wrong price, then you don't make money. So I think the two most thing we try to focus is promoter and the business. So I think whenever we want to assess promoters, so I always say that small cap investing is like a marriage. So somebody has a sister or daughter in the family, and we're trying to find a life partner for her or him, kind of. So the kind of groundwork we do, we go and speak to the neighbors, we go and speak to friends, we go to their offices and speak. So whatever source of information you get, you do that. So we also do similar things. So we try and, whichever company we invest in small cap, I think we try and ensure that, we have visited company a couple of times, we have done plant visits, we have met the suppliers, we have met the distributors. So you get to know a lot of things about the culture of the company. And I think the culture of the company is very important. So this kind of channel checks really come handy. As I said, small cap is a very research intensive category. And most of the work which you have to do is before buying. So after you bought some stock and you realize you have made mistakes, so at least you are 50% down. So it's better to spend more time, get yourself comfortable. So we have developed over a period of time, so we have one of the very large research team. And we encourage our research team to get all these softer aspects right. So that gives you a lot of comfort. See, in small cap, what happens, like many times things don't pan out the way you thought. And many times stock price come down very sharply. So if stock price is going up, then you're comfortable holding. What you do when some of the stocks which you're holding goes down by 70-80%. So I'll give this example. For example, in our portfolio, we have this stock called Tejas Network. So we had bought this stock around 230, 240. It went almost up to 440, 430, 440. But we didn't sell it because we thought it's a good company with good promoters, products in telecom sector, patented products, and there's no other company of that kind of caliber. But unfortunately, then in 2018, bear markets came in small cap, and plus they were expecting a couple of orders which didn't come. Then there was in one order that almost 200 crore of their money was stuck with the government, which took a lot of time, and markets were bad. So stock price fell from 440 rupees to almost 40 rupees. So this kind of falls should not affect your conviction. So we were very convinced that it's a good company. So in fact, we started adding as stock price fell below 80. And finally, our conviction was proven when this company was acquired by Tatas. And today, it's considered India as one of the most potential company with the highest potential in telecom industry. So basically, you should be able to be comfortable with your research so that when things go bad, it doesn't affect your conviction. So I think this is a very research intensive category, believe me. So I think you have to really, this is not the game which you can play sitting in office looking at Excel sheet. You have to actually, go to ground and make your feet dirty. That's the only way.
Wonderful, sir. Thank you very much. I'm going to go out to the house, and we have 4 most prominent equity fund managers, and any of you have questions, the house is open for those questions. If somebody can hand over the mic to people who want to have their questions answered.
Good afternoon. My name is Rohit. My question is it a good time to invest in newly listed new generation companies like Zomato, Nykaa, MapMy India? Post-correction. Mr. Khemani. Thank you.
So I've gone on record to say that we saw a huge amount of euphoria last year, and I remember last year we had written a sort of big note that people are investing in this. It's a fad. People are investing out of FOMO, and it will fade away. So so in every time, every cycle, these kind of things do build. There's nothing wrong with the new tech. I mean, there will be a lot of disruption happening in the economy, in many businesses, led by tech. But that is one part. But how to make money from that is very different part. I think we had a very easy capital market scenario, and that kind of led to funding of many of these ventures, where losing money was fashionable. More money you lost, high valuable you became, right? Which is very counterintuitive. I mean, all of you are businessmen, so it's very counterintuitive that how can you value something more when you are making a lot of losses. But it got socialized, created that, oh, we don't understand, maybe there's some other way of valuing this company, right? And this happens time and again. I will take you back to the memory of 2000, where most of the internet companies used to get valued based on eyeballs, how many eyeballs are coming on the website based on that, right? So every time and again, new kind of things are formed. So we have to be very careful. I think just in the new tech, we should not assume that, oh, I don't understand new tech, so how will I value and how should I invest? You don't have to invest if you don't understand. So we should not invest into companies or businesses which we don't understand, number one. As far as I think a lot of froth has been cleared, but I personally believe that, and I said that earlier also, many of the companies which went public won't be listed in next 5 years, because many of them don't even business model, according to me, or they will not be getting the funding which they need, because the game has changed now. So all thing you need to understand is that companies which are having some moat, which where and there's a path to profitability. Those are the businesses one can definitely look at. Then, of course, I will look at valuation, right? So currently, at least, I don't find any company, as we call new tech company in this, which are kind of in that. I mean, closest comes to, in my opinion, is Zomato, where I think that probably at least there's some moat where people eat, use. But by the way, there's another very big disruption, in the offing called ONDC. So what UPI did to payments, ONDC will do to the e-commerce. So, businesses like Amazon or Flipkart, they are all under threat, including Zomato. Food delivery can also, by the way, get disrupted or can come under. So, when any business is, in my opinion, undergoing through a disruptive phase, it's not very clear who will be the winner. And, so there are a lot of sort of open-ended uncertainties. So till the time that clarity is there, I mean, you have to have huge amount of conviction, leap of faith, and currently, at least, I don't find, that's my view, I may be wrong, I'm very happy to be wrong. Still, I don't find any or many interesting plays in that space. So my general guidance has been that just don't do anything for the sake of new tech. Our job is to make money on a risk-adjusted basis. You can make equal, bigger, more money in a very, very boring, stupid, like he was saying, value-oriented manufacturing business. I mean, companies like KPR Mills, which we own, is 5x in last 2 years. Praj Industries 5x in 2 years. Timken is up 4x in last 2 years. So, I mean, there are so many companies which are up, and also our job is to, I mean, if you are buying for, bagging rights in the parties, that's a different thing. But if you're buying for making money, I think you have to see risk reward very clearly. And currently, I think I would still, be very wary of looking at them. I don't know if anybody else has any value.
Hello, sir. My name is Shaunasis Chatterjee. I have two questions. The first one is, say I am initiating a position which say 3-4% of my allocation, and say it goes up 6-7%, and it becomes say 22% or 20% up of my position. Should one start trimming that position? I mean, stop watering the flowers to reduce the risk, or if the growth is intact and valuation is little bit extended, one should just keep holding it?
See, whenever one is investing in equities, I think rather than just looking at one or two stocks, I think it's better to look at a portfolio level, kind of, because I think it's important to adjust overall risk in the portfolio. So if any of your position has really done well, I think you have to revisit that. So if you feel very much convinced, you can still hold on. It can be still number one position. But if it starts becoming, say, 6%, 10% of the position, and tomorrow, see, markets are like, while we may feel we understand, but something can go wrong from anywhere. Like sometime government policies can change, sometime some promoter level, some changes happen, which we can't foresee. So it's always better to follow prudent risk management policy and always trim a position, kind of. So I think you should follow a very balanced approach overall.
Thank you. And I have another question. So it is a common advice that you keep holding or keep adding stocks, good businesses which are facing temporary headwinds. Now, sometimes it becomes difficult to understand whether the headwind is structural or temporary. So, for example, now with hindsight, everybody says that 2016 Divi's lab was a no-brainer. But if I think if the USFDA OAI persists, and maybe for 2 years, the innovator will stop partnering with Divi's, and the business may go for a toss. So how should we think? Should one sell 50% or just get out of the position, or how do you judge whether it's temporary or permanent?
So because you asked a question specific to pharma here, so effectively see these regulatory issues that come, be it Divi's Labs, Import Alert, or any other pharma companies' regulatory issues. They tend to be what we call transient. But for Divi's, it was less transient, and for others, it has been more permanent. So you need to understand why the issue happened, and you need to go a bit deeper. So as a retail investor, it may be difficult for you to analyze it in the right light, because you need data from the history of such situations with other companies. So for instance, for Divi's, we were very confident that it was going to be transient, because Divi's manufactures goods for innovator pharma companies. And innovator pharma companies that depends on Divi's, they can't have Divi's under an import alert, because then if Divi's can't manufacture, then they can't manufacture or sell, and therefore their patients who are on the patented drug do not have an alternate medicine to go to. So that will lead to human loss, life loss. So that FDA will not allow to happen. So it was always very clear that Divi's would come out faster than others. But then if you look at Ranbaxy, if you look at Sun Pharma, if you look at Wockhardt, they haven't been able to come out despite a decade or more, because they make generics, and others are also producing the same drug. So FDA has no compulsion to allow them to come out even if they have not done their work. So these are the data points, which we kind of look at to understand. More specifically, if as a retail investor you want to invest in this sector on your own directly, it's better to not take this risk at all. So don't buy companies that are heavily invested in the US, because that is where the FDA and all these regulatory actions happen. So you are better off avoiding those companies altogether. So I'll give you an example, right? Divi's, you said, it's a phenomenal success story, right? Divi's got IPO'd in 1985. Their stock price CAGR is about 22% or something, right, to date. FDC Limited, the company that makes Electrol, Ziffy, right, and has no exposure to US, no significant exposure to US. They got listed in 1999, and everybody believes that they are a very lackluster, boring company. Their stock price CAGR is 20% since listing. And this is after a 30% correction in the last 4 months. The stock is down 30% in last 4 months. Despite that, it's a 20-ish% CAGR since listing for 23 years now. So you can buy boring businesses which are far better fundamentals, may not look that, as he said, sexy, but they give you the cash flow, they give you the ROE, and they give you the returns for as a shareholder. So you don't need to engage in all of this unless you have the understanding, the data points to understand what's going to happen. So I would advise to stay away, not engage.
Good afternoon. I'm Purushottam Gaggar, Chartered Accountant practicing at Guwahati. These interest rates are increasing. Recently, just last 2-3 days, all the banks have increased the interest rates by more than 1%. SDFC fixed deposit rates are now 7.5%. The small businessmen are highly affected because of this, because they are highly leveraged. This will ultimately affect the corporate profitability also. Moreover, the EMI of general public is also going to increase. So don't you think these factors will affect the economy in the short run? Because this cycle of interest rates is going to continue for next, I think, 6 to 8 months at least. So in short run, I fear the risk of like capex also getting affected. Your views on this? Thank you.
So interest rates are definitely going up. There's no question, and it's gone up. But if you just look at 2 points I would like to make. First, the differential between global interest rates and so cost of capital is global in that sense. So if you look at today, the mortgage rate in US is almost close to 6.5%, and mortgage rate in India is 8.5%, right? This kind of low difference, it has never been there. Historically, it has been in the range of 7-8%, right? We have a situation where cost of capital in India was mortgage rate was 9% and US was 0%, 1%, right? So today, if you ask me, if I were to look at, let's say, longer history, the cost of capital in India is one of the cheapest ever, right? So, it's a globally competitive world. So, like one of the things when we chat with companies in manufacturing and all, this advantage of low cost of capital is also making up, apart from other things, also making it competitive in the global world, right? So I think that's the one point we should keep in mind. Of course, it looks higher when it has gone up from 6.5% to the current levels. And this is part of the global cycle. So, and whole global, this is being done also to make sure that inflation goes down and all. So once it settles down, my personal view is that we are seeing peak of inflation. Maybe, we saw inflation 9, 10, 11% kind of trajectory because of high food price, high commodity prices, high energy prices, right? Post-Ukraine war, so now we are sitting on a high base and all three things have come down. So you will not see a sustained high inflation, as we go into 23 for a long period of time. Already data points are coming down. So as far as I think inflation is concerned, I think we have seen the peak. Regulators are generally, they can't, sort of preempt things. So they will have to wait for the data to start getting more comfort around raising the interest rates. I think maybe Fed will do another 25, 50 or maybe 75 basis point, but a lot of it is already factored in as far as the, that's the reason if you see yesterday, after that event, markets kind of were okay with it, right? So same thing, I guess in India, in my opinion, another 25, 30, 40 basis point max. I don't think India will go beyond that because our problem of inflation is not as bad as, probably, in US. But, all central banks have to kind of act in tandem because there is a sort of global linkages. So my sense is that, we've kind of closer to peak of interest rate inflation. More importantly, as far as the investment cycle is concerned, I think the biggest, on a global basis, we are cheap. Secondly, more important determining factor is the demand outlook. As long as the demand outlook is there, if let's say your project IRR is at 15% or 14%, that additional 2% reduces the risk, but that will not make project unviable. And when especially we know that this is likely to come down, in next 12 months, 18 months, that's a period, it's not going to stay structurally there. Because today our inflation problem is not structural. In fact, I personally feel that as we sort out our manufacturing issues, as a lot of work is happening on the energy side, our inflation will come down. And that may not be visible in 3 months, 6 months, but it surely should happen in 12 months, 18 months. So to that extent, I think, we will have to live with this high capital, but I don't think this will sort of really kill the investment cycle. If anybody wants to add anything.
All right. Thank you, sir. Thank you, everyone, for giving us insights to all our investors. A closing question of this session. We are in Sapient Conversations 8.0. When we'll be sitting for Sapient Conversations 18.0, which are the sectors you think would be the winners when we sit for 18.0?
Right. So, as Vikas highlighted, I think capex cycle in India is just starting. And in the last 10 years, we didn't have any significant capex. And if India is going to become global sourcing hub, and also, rightfully, government of India is encouraging investment in manufacturing with schemes like PLI, and government is also investing big time into infrastructure. So I think capital goods is one sector which comes very clear to mind because there are huge entry barriers. And most of the companies in this space are around for like multiple decades. So they already have a huge asset base which they can exploit and respond to those kind of demand situations very fast. So if I were to put one sector, I think for next 10 years in India, I think capital goods comes to top of my mind. Like,
It's hard to disagree with Samir. So, if I were to, I would capital goods and the entire infra gamut. I think both areas where we need a lot of spending, and I think that's where we'll see a lot of focus, both by private and public. So, I would think that's that's where we would probably make most of our money over the next 5 to 10 years. Yeah.
Yeah, so I also agree that, with the capex cycle beginning, capital goods and infra should do brilliantly well. At the same time, if you look at the way our healthcare consumption has progressed, last decade, so a decade back, 2.5% of GDP was spent on healthcare. Today it is 3.5%. Going forward, if it can become 5, 6 in the next decade, so you're talking about GDP growing at 10 and healthcare spending growing at 15, 16%. Because that has been the trend so far in the last decade. So I think healthcare can be a very, very good bet as well. It is also sort of a bet which is immune to this narrative of interest rates, inflation, demand destruction, because it's non-discretionary consumption. And we being a low-cost healthcare destination, nobody leverages to take healthcare services. So interest inflation or demand destruction doesn't play a role in this sector at all. So if I were to take a safer bet, low beta bet to the entire 10-year growth journey, it would be healthcare.
So I think, again, more than sector, I think India will do well. So I think if 10 years down the line, I personally think that Nifty will be anywhere between 1.5 lakh and 2 lakh. So that's the number, and now what that number will be, I don't know, but it will be in that kind of range, because I think overall India will do well. One sector, or I will probably say two sectors, the largest quantum of the wealth in terms of absolute amount, I think will be created by banking, but highest percentage return, I personally think will be done by manufacturing. I think what happened to IT in mid-90s probably can happen to manufacturing in this next 10-year phase. So percentage return probably you will get there.
Great, sir. Thank you very much, all of you coming here and giving us wisdom for the investment. All these gentlemen will be available post-lunch for you to have conversation. So thank you very much. Please give a big round of applause for all of these. Thank you.
Hello. Thank you, Vallabh sir, and all our panelists. So I'll request you all to stay back for felicitation. This truly was a thought-provoking session. I would now like to call upon stage Mr. Gautam Das and Mr. Sandeep Modi for felicitating our esteemed panelists. I would request Mr. Gautam Das to felicitate Mr. Vikas Khimani and Mr. Aditya Khemka. So I would now request you to, sir, please stay back. So I'd like to request you to felicitate Mr. Dalian Pinto and Mr. Samir Raj as well. Thank you, Vallabh sir, for moderating this session. A portfolio is a beautiful outcome of asset allocation, and thus, in this session too, it's now time to allocate some time to ponder over intelligent risk-taking in 2023 in terms of debt investing. Now, moving from return on investments to return of investments, please welcome our esteemed panelists, the debt champions of the industry, for our second session of the day, Intelligent Risk-Taking in 2023, Do's and Don'ts, Debt. Please welcome Mr. Manish Bhatia, Deputy CIO, Fixed Income, ICICI Asset Management Company. Mr. Manish joined ICICI Prudential AMC in October 2005. His core competency lies in portfolio management, rates trading, and credit research. He currently manages various credit and non-credit debt funds and debt portion of hybrid funds. Mr. Manish has over 17 years of experience in Indian capital markets and has been associated with Aditya Birla Group prior to joining the AMC. Welcome, Mr. Manish. Now, I would like to welcome Mr. R. Sivakumar, Head Fixed Income at Axis Asset Management Company. Mr. Siva has over 2 decades of experience in the Indian asset management industry, working across asset classes and functions. He handles the overall investment strategy, performance, and risk management across fixed income investments. Prior to Axis AMC, he was associated with Fortis Investments, Sundaram AMC, and Zurich India AMC. The panel will be moderated by none other than our very own Mr. Saurav Bhatia. Mr. Saurav Bhatia, sir comes with an experience of 2 decades spanning across different profiles in fixed income markets, managing and advising fixed income portfolios for corporate treasury at Sahara Group, Retirement Fund, foreign portfolio investors, life and non-life insurance at HSBC AMC, bank treasury at ICICI Bank, and lastly heading the fixed income desk at DSP Mutual Fund. After serving 2 decades in professional roles, Saurav moved on to his entrepreneurial role at Sapient Wealth. As head, macro strategy and fixed income, he drives strategies for rates, currencies, and commodities, which collectively matter the most for businesses on decisions like cash flows and eventually investments. He brings in diversified experience, highlighting the prominence for macro strategies to identify turns in various asset classes. I would like to request Saurav sir to start this session. Thank you.
Thank you, Sneha. Shiva has a flight to catch, so it's a hard stop at 2 p.m. And typically, as we all know, fixed income doesn't take time at all. Before I begin, I'm sure सबने बॉर्डर मूवी देखी होगी. जब लड़ाई के थोड़े बादल छिड़कते हैं तो एयरफोर्स वाला आर्मी वाले को आके बोलता है कि हम ही हम हैं तो क्या हम हैं और तुम ही तुम हो तो क्या तुम हो. I think from a market and economy standpoint, जब इकोनॉमी पे थोड़े बादल छिड़कते हैं तो डेट वाला भी इक्विटी को आके बोलता है कि हम ही हम हैं तो क्या हम हैं और तुम ही तुम हो तो क्या तुम हो. On this context, thank you, Shiva and Manish, and welcome to Guwahati on behalf of all of us. Well, to begin with, the first standpoint I want to put in is, can you have the slides, please, Vaishali? till it comes. One thing which gets often discussed, especially over the last quarter or two, has been about the decoupling story, the decoupling of India from an economic standpoint, how markets, especially the equity markets, are reflecting it. And this is to start with Shiva. How does the decoupling work in interest rate markets? And if US is raising rates, can emerging markets withstand or can be confined to decoupling?
Thanks. First of all, thanks again for inviting me, having me over. It's great to be here. Bond markets have not only been decoupled from US, they have been decoupled from RBI also. Since May, June of this year, the 10-year yield, which was at 760 then, has now dropped to 720, despite the fact that RBI is raising rates, Fed is raising rates, everybody is raising rates. So, at one level, it looks like bond markets are completely operating in a different environment as compared to the central banks. And I think it is important that we understand why, because markets are always forward-looking. Markets are not reacting to what RBI is doing today. The policy of the RBI is for the next 2 months. If I'm making an investment decision in Government of India securities for the next 10 years, 20 years, 30 years, 40 years, what happens in the next 2 months is not much of relevance. The question is, what will happen 6 months from now, 1 year from now, 3 years from now, 5 years from now? And as we converge with the rest of the world, one thing which is obvious to me is that interest rates in India will start looking more like interest rates in the Western economies over longer periods of time. So if you look at India in the 90s, we used to be comfortable mid-double digits interest rates, 14, 15, 18%. As we moved into the 2010s, we moved that one notch lower. But we were still routinely having above 8. Now, 7.25 looks high for 10-year yields in India. And as time goes by, I think that converging will happen. We are not diverged from the rest of the world. I think we will converge with the rest of the world. From time to time, you will see periods when our yields are going in a very different direction, our interest rates are going in a very different direction from the rest of the world. But over periods where it matters to us for decision making, 5 years, 10 years and beyond, I think there will be more convergence than divergence.
Theoretically, it's said that when US raises rates, and this continuation with this, typically the interest rate differential puts a little pressure on the currency.
Yeah.
So,
I'll take this, all of us back to the previous big rate cycle. Between 2004 and 2006, the US raised rates, the Fed funds rate, from 1% to 5.25%. That was then one of the largest set of, this time we'll go from 0 to 5.25. So it'll overtake that, but that time it was the largest, or one of the largest set of rate increases in modern era. At the end of that rate cycle of the US at 5.25, RBI was at 6.5. And guess what? Everything was okay. Stock markets did fantastically well. Bond markets were reasonably okay. Currency, if any of you remember, after the dot-com crash, rupee was 50 to the dollar, and by the end of 2006, 2007, we were at 38 to the dollar. Currency did well. We were running current account surpluses. Inflation was not a problem. So when you have a growth cycle, when you have a sort of risk-on mode in some sense, you don't need interest rate differentials to support the currency or to support growth or to support flows or anything like that. We will get flows because there is flows. But today the environment is slightly different. There's a kind of worries about recession. There's worries about external account. There's worries that the dollar is too strong and the rupee is weakening. In that environment, perhaps we need a slightly more spread. Maybe if the US takes rates to 5 or 5.25%, this time maybe we cannot stop at 6.25 or 6.5. So we do need to keep that in mind, that in a risk-off mode, maybe we need a higher rate of interest. So perhaps this time around, if the Fed goes to the same level as they did in 2006, which is 5.25, we may not stop at 6.5, but we will go to 6.75 or 7%. But not much more than that. I don't think we need that much more of a spread to attract money.
Thanks Shiva. Well, Manish, if I can put this, it looks a lot more easier when you want to quell inflation. इन्फ्लेशन का रिस्क है 75 बेसिस पॉइंट से रेट बढ़ाते जाओ एंड इतनी आदत डाल दो कि 50 बेसिस पॉइंट रेट हाइट से हम खुश होने लगते हैं। टिपिकली ये जो तूफ़ान चला लास्ट 6 महीना, तूफ़ान के बाद थोड़ी तबाही आती है। सो व्हाट इज़ डिफ़िकल्ट टू मैनेज? पिछला 6 महीना जो तूफ़ान देखा वो कि जो तूफ़ान 5% का US फेड रेट 6.5-7% के बीच में शायद इंडिया का रेट्स इवेंचुअली कि and the impact what it will cause on a typical slowdown, which is how do you manage these two parameters?
पहले तो मैं बताना चाहूँगा कि इंटरेस्ट रेट जो है ना ये सिक्लिकल होते हैं, इकॉनमी की एक साइकिल होती है और उस साइकिल के हिसाब से इंटरेस्ट रेट्स ऊपर और नीचे जाते हैं। यूएस के इंटरेस्ट रेट जो ऊपर जा रहे हैं, टिपिकली यूएस एक लेट साइकिल में है और वो लेट साइकिल कैसे डिफाइन करते हैं? लेट साइकिल डिफाइन करते हैं जब एक्सेसिव डिमांड होती है। तो आप देखेंगे कि यूएस में इस समय एक्सेसिव डिमांड है बिकॉज उन्होंने बहुत ज़्यादा खर्चा किया, गवर्नमेंट ने कोविड के टाइम पे बहुत ज़्यादा खर्चा किया और उस कारण से वहाँ पे एक्सेस डिमांड है, एक्सेस इन्फ्लेशन है, जॉब ग्रोथ भी बहुत ज़्यादा स्ट्रॉन्ग है। और जब ऐसा होता है तब सेंट्रल बैंक्स को ओवर टाइटन करना पड़ता है। नॉर्मल इंटरेस्ट रेट यूएस में 2-2.5-3% के आसपास होना चाहिए, सेंट्रल बैंक वहाँ पे ओवर टाइटन कर रही है। जब इंडिया की बात करें, इंडिया की साइकिल बहुत अलग है। इंडिया में लास्ट 5 से 7 साल तक हमने एक स्लोअर ग्रोथ साइकिल देखी है। लास्ट साल भर के अंदर हमारे यहाँ पे रिकवरी साइकिल आई है। इसलिए हमारे यहाँ पे जो रिजर्व बैंक ऑफ इंडिया कोशिश कर रहा है वो इंटरेस्ट रेट को न्यूट्रल लेवल पे ले जाने की कोशिश कर रहा है, टाइटनिंग की कोशिश नहीं कर रहा है। सो इसीलिए जब कहा जाता है कि क्या इंटरेस्ट रेट रेस्ट्रिक्टिव हो जाएगा इकॉनमी के लिए, उसको देखने का जो एक तरीका है वो इस ढंग से देखना चाहिए कि आप किस इन्फ्लेशन को टारगेट कर रहे हैं और आपका इंटरेस्ट रेट क्या है। आज से 4 साल पहले, इससे पहले जो आरबीआई के गवर्नर थे वो 4% इन्फ्लेशन पे बहुत ज़्यादा फोकस थे। 5% इन्फ्लेशन जाता था वो इंटरेस्ट रेट बढ़ाना शुरू कर देते थे। अभी जो रिजर्व बैंक ऑफ इंडिया है दे आर कंफर्टेबल कि इन्फ्लेशन 6% पे रहेगा तो कोई प्रॉब्लम नहीं है, 6 के हल्का सा नीचे होना चाहिए। दे डोंट वांट इन्फ्लेशन टू गो टू 4%। और अगर 6% इन्फ्लेशन है और आरबीआई अगर इंटरेस्ट रेट 6.5, 6.75, मेरे हिसाब से शायद 6.5 पे रुक जाना चाहिए, लेकिन अगर वहाँ पे लेके गया तो मुझे लगता नहीं है कि ये रेस्ट्रिक्टिव जोन है। सो मुझे वो जो स्टॉर्म की, तूफान की बातें हैं ना, वो तूफान की बातें इंडिया में नहीं दिखती है। इंडिया में ग्रोथ सिक्लिकली अच्छे अपटर्न पे है एंड इंटरेस्ट रेट रेस्ट्रिक्टिव नहीं है। इवन आप मॉर्गेज के हिसाब से देखें, मॉर्गेज इज समथिंग विच डिफाइंस एवरीबडीज पोर्टफोलियो एंड हाउस होल्ड्स। मॉर्गेज का रेट अभी 8-8.5% है। यहाँ से अगर रिजर्व बैंक ऑफ इंडिया रेट हाइक करता है, बैंक्स बहुत कम्पिटिटिव हो चुके हैं और बैंक्स ज़रूरी नहीं है कि पूरा का पूरा मॉर्गेज बर्डन हाउस होल्ड्स पे ट्रांसफ़र करें। सो हो सकता है कि आरबीआई 25 या 35 बेसिस इंक्रीज़ करता है, मॉर्गेज रेट्स 10 या 15 बेसिस ही बढ़े। सो इसीलिए मुझे लगता नहीं है अभी हम इस समय में हैं जहाँ पे इंटरेस्ट रेट्स बहुत ज़्यादा रेस्ट्रिक्टिव हो जाएगा इंडिया के लिए।
अगर 5 क्वार्टर पे यूएस रुकता है, आई मीन सो फार वी हैव ओनली सीन राइज इन कॉस्ट ऑफ मनी, रिडक्शन इन अवेलेबिलिटी ऑफ मनी इज अ फिनोमेना नेक्स्ट ईयर. So what is a bigger pain, just seeing a rise in cost of money or actually feeling the reduction in availability of money at elevated yields?
Right. So सौरभ, ये बहुत ही अच्छा क्वेश्चन है। सौरभ ने पूछा कि अगर इंटरेस्ट रेट ऊपर किया, अब आरबीआई ने बहुत ज़्यादा इंटरेस्ट रेट ऊपर नहीं किया, लेकिन पैसे की अवेलेबिलिटी कम हो गई। पैसे की अवेलेबिलिटी कैसे डिफाइन करते हैं? अगर बैंक का क्रेडिट ग्रोथ हो रहा है, उन्हें डिपॉजिट मिल रहा है क्या, अकॉर्डिंग टू दैट उनको कितना और डिपॉजिट रेट बढ़ाना पड़ता है डिपॉजिट के लिए। सो टिपिकल ये ग्रोथ साइकिल में ऐसा ही होता है, जब क्रेडिट ग्रोथ बढ़ती है सो बैंक्स को अपने बैलेंस शीट में डिपॉजिट रेट इंक्रीज करके डिपॉजिट्स को शोर अप करना पड़ता है। सो टिपिकली इस फेज़ में ऐसा होगा, अगर इकॉनमी ठीक कर रही है, बैंक्स का क्रेडिट ग्रोथ होता रहेगा, तो उनके पास कैपिटल भरपूर है, वो डिपॉजिट की रेस चालू रहेगी। और डिपॉजिट की जब रेस चालू होती है तो शॉर्ट टर्म इंटरेस्ट रेट्स हमेशा ऊपर चले जाते हैं। सो शायद 6.5 इज़ वॉट विल डिफाइन द आरबीआई रेट्स, लेकिन जो इन्वेस्टर को रेट मिलता है, जो डिपॉजिट रेट है या शॉर्ट टर्म वाईटीएम है आपके पोर्टफोलियोज में, दैट विल बी मोर अट्रैक्टिव देन द आरबीआई रेट्स। सो मेरे हिसाब से ये फिक्स इनकम की जो जर्नी है ना, ये अभी बहुत अट्रैक्टिव लेवल पे आ गई है, जहाँ पे जो लास्ट ईयर 4%, 3.5%, 4.5% की हम बातें करते थे, वी आर नॉट टॉकिंग अबाउट 7%, 7.5%, 8%, 8.5%. सो ये बहुत ही डिफरेंट जोन में चला गया है. और जैसे क्रेडिट ग्रोथ बढ़ता रहेगा, वैसा ही डिपॉजिट पे प्रेशर रहेगा और शॉर्ट टर्म इंटरेस्ट रेट्स वैसे ही इन्वेस्टर्स के लिए ज़्यादा अट्रैक्टिव होते जाएंगे.
शिवा, इन कंटेक्स्ट ऑफ द फर्स्ट क्वेश्चन अगेन, जो हम बात कर रहे थे कि यूएस की कहानी थोड़ी अलग है, वो अलग स्पीड पे चल रहा था, बट फैक्टरिंग इन कि यूएस के रेट्स बहुत ऊपर गए, डीएम डेवलप मार्केट्स के यील्ड्स बहुत ऊपर गए, एंड देन इफ द इकोनॉमिक स्लो डाउन हैपन्स, हाउ डू यू विथस्टैंड दैट? इंडिया में भी असर तो आएगा ही. टिपिकली जस्ट टू गेट दैट पॉइंट, पिछले वाले पैनल डिस्कशन में भी था कि लास्ट 3 साल हमने डिस्पाइट ऑफ ऑल दिस चैलेंजेस निकाल दिए. हमारे पास बंदूक में 3 गोलियां हैं: गवर्नमेंट कैश बैलेंस, लिक्विडिटी और क्रेडिट ग्रोथ. आज अगर हम देखें तो कैश बैलेंस, क्रेडिट ग्रोथ, लिक्विडिटी तीनों हमने काफ़ी उड़ा दी. तो हाउ विल यू विथस्टैंड इफ अनदर कैलामिटी कम्स इन?
That is not an immediate point of concern. I think there is especially in the US, this is the most anticipated recession of all time. So anybody who is in the US or Europe or anywhere else who is not preparing for a recession is foolish. And if you are preparing for a recession, when that recession happens, nothing happens. Businesses are ready. Recessions are disruptive when it is unexpected. Sudden dot-com collapse, or some 9/11 happened and there's an immediate loss of confidence. Housing crash happens, Lehman Brothers happens, loss of confidence. But if everybody knows there's a recession coming, it's already in the price. It's known to people. I think that we are overplaying this risk of recession. But if we are overplaying the risk of recession, then we must be prepared for higher interest rates. Where does inflation come from? When do prices go up? When there is so much of capacity, if the demand goes above the capacity, then you can, as a seller, increase prices of your products because there is more demand and there is production. This is where we are in the world. In some sense, the hope is because of recession that demand comes down to the level of capacity and inflation problem will get solved. But if there is no recession in the US and the rest of the world, then inflation will be elevated and interest rates will need to go up more to bring down that level of demand. Let me explain, just take 2 minutes also to explain one of the points that Manish made, which is very important, which is on not just the nominal interest rate. It's not that whether interest rates at 5% or 7% is high or low. It is in relation to inflation. If interest rate is 4% and inflation is 7%, as a businessman, I can go and borrow large amounts of money and park inventory. At the end of 1 year, the inventory has gone up by value by 7%. I can repay my loans and voila, I've made money. When you have negative real interest rates, all manners of stupid businesses make sense. The previous panel talked about, negative free cash flow. Negative free cash flow for all of these new dot-com companies, right? If you are valuing a business, negative free cash flow is bad news. What if your interest rates are also negative? When you discount, the numerator is cash flow, denominator is interest rate. If numerator is negative, denominator also is negative, I can justify any business, any valuation, anything. So for a large part of the last decade and a half, all manners of demand has been sustained globally because of very high liquidity and very low interest rates and very low real interest rates, the interest rates remaining below the rate of inflation. If you want to solve this problem of inflation, you have to have interest rates above the rate of inflation so that people are making intelligent decisions about what to do with my money. We have in India reached that point. 2 years ago, 10-year Government of India securities were 5 point something. Most of the money market was 3 point something, 4 point something on bond markets. Inflation was at 6. It did not make any sense to save. Today you're getting 7 to 8% yield on products. Government of India securities are giving you 7.2 to 7.5%. Inflation is expected to be about 5.5%. Of course it makes sense to save. It makes sense to say put money in fixed income. A lot of froth in the economy which is leading to inflation is also going away because of that. In the West, it will still take some more time before they get to that point. The Fed is now expecting inflation hopefully to soften to something like 4% or something in the next year or so. If that happens, and if the Fed funds rate by that time has reached closer to 5%, maybe they will start seeing inflation coming down. But I think if you look at the larger context, we are in a very good place in India. We don't have to worry about this Fed. We don't have to worry. As long as RBI has done much of the heavy lifting. A decent part of the heavy lifting is left for Fed. A lot of it is left for ECB, Japan and others who are way behind the curve. But for India, I think we are in a significantly better position. Yes, little bit more rates will go up at the margin, little bit more mortgages get expensive, little bit more FD rates will go up. But I would think that almost most of the heavy lifting is finished now.
मनीष, अगर वही पॉइंट लूँ तो खर्चा कौन करने वाला है आगे जाके? गवर्नमेंट, कॉर्पोरेट की हाउस होल्ड? बिकॉज in the previous panel discussion, and typically what we hear, corporate balance sheets are highly deleveraged. But अगर मैं other two balance sheets देखूं, which is government and household, they are relatively highly leveraged for now. So आगे जाके खर्चा कौन करेगा? सिर्फ सरकार करेगी या do you expect?
अगेन मैं इसको इस ढंग से समझाना चाहूँगा, इकॉनमी में क्या है, एक सेगमेंट दूसरे सेगमेंट को पुश करता है और उससे इकॉनमी रोल होती है. कोविड के टाइम पे इकॉनमी बहुत ज़्यादा वीक हो गई थी, प्राइवेट सेक्टर सेंटिमेंट्स बहुत ज़्यादा वीक हो गए थे. जब ऐसा समय आता है गवर्नमेंट को अपना फिस्कल डेफिसिट इंक्रीज़ करना पड़ता है, एक्सपेंडिचर इंक्रीज़ करना पड़ता है, तभी इकॉनमी वापस रिवाइव होती है. जब इकॉनमी रिवाइव होती है, सेंटिमेंट्स अपने आप प्राइवेट सेक्टर के इंप्रूव होते हैं, सेंटिमेंट इंप्रूव होते हैं, प्राइवेट सेक्टर डिमांड वापस आती है, कंज्यूमर्स वापस से डिमांड नॉर्मलाइज करते हैं, कॉर्पोरेट जो होते हैं वो अपना कैपेसिटी बिल्ड करना शुरू करते हैं. और जब वो करते हैं तो हाउस होल्ड की इनकम भी बढ़ती है, बिकॉज अल्टीमेटली हाउस होल्ड्स या तो मतलब कॉर्पोरेट्स के साथ सैलरी इनकम के थ्रू ट्रांसफ़र लेते हैं. अब इस समय ऐसा है कि इंडिया को देखा जाए तो इंडिया में के शेप्ड रिकवरी है. के शेप्ड रिकवरी में क्या होता है कि एक जो अपर एक्लन ऑफ द सोसाइटी है, जो मतलब जो लोग के पास ज़्यादा पैसा है, उन्होंने बहुत अच्छा इनकम ग्रोथ देखा है ओवर द लास्ट 1.5 years. जो लोअर सेगमेंट है वहाँ पे इनकम ग्रोथ कम हुई है. और जो सौरभ ने कहा कॉर्पोरेट सेक्टर है, कॉर्पोरेट सेक्टर हैव डन फिनोमिनली वेल इन द लास्ट 2-3 years, एंड बिकॉज ऑफ विच उनका जो लेवरेज था लास्ट 5-7 साल से, इंडिया की प्रॉब्लम थी कि इंडिया में बहुत जगह पे बहुत सारा लेवरेज था. पहले बैंकिंग बैलेंस शीट और कॉर्पोरेट सेक्टर्स में लेवरेज था, उसके बाद रियल एस्टेट सेक्टर का लेवरेज था, उसके बाद NBFC सेक्टर का लेवरेज था. ऐसे कंटिन्यूसली एक लेवरेज साइकिल चल रही थी. अभी वो लेवरेज साइकिल ब्रेक हुई है, कॉर्पोरेट्स का अर्निंग्स ग्रोथ इंक्रीज हुआ है, उन्होंने अपना लोन कम कर दिया है, डीलेवरेज कर दिया है. तो जो सेविंग्स आज के दिन में है ये कॉर्पोरेट बैलेंस शीट्स में पड़ी हुई है. और जो कॉर्पोरेट बैलेंस शीट्स की सेविंग होती है, नॉर्मली साइकिल जब शुरू होती है, कॉर्पोरेट बैलेंस शीट्स जब सेव करते हैं, या तो वो अपॉर्चुनिटी देख के इन्वेस्ट करेंगे, या तो गवर्नमेंट को कहीं मनी ट्रांसफर करना पड़ेगा टू द हाउस होल्ड, सो दैट हाउस होल्ड डिमांड वापस रिवाइव हो. अगर कॉर्पोरेट ये सेविंग्स लेके बैठ गए कि मुझे मतलब ये खर्च नहीं करना है, तो इकोनॉमिक साइकिल अटक जाएगी. लेकिन अगर कॉर्पोरेट स्टार्ट्स टू इन्वेस्ट, सो वो इन्वेस्ट करेंगे तो वो हाउस होल्ड की इनकम होगी, कोई प्लांट लगाएगा, कोई मशीनरी लगाएगा, कंस्ट्रक्शन लेबर यूज़ होंगे, एम्प्लॉयज़ बढ़ेंगे, एम्प्लॉयज़ की सैलरी बढ़ेगी, तो ये साइकिल नेचुरली शुरू होती है. 2003-4 में भी देखेंगे तो यही साइकिल. सबसे पहले कॉर्पोरेट सरप्लस बढ़ा था, कॉर्पोरेट सरप्लस बढ़ा था, आईटी रेवेन्यू, आईटी इनकम्स बढ़ी थी, आईटी सेक्टर में जो एम्प्लॉयज़ थी उनकी सैलरी बढ़ी थी, बीपीओ सैलरीज बढ़ी थी, उनका डिमांड बढ़ता है. जब ये डिमांड बढ़ता है तो टर्शरी सर्विसेज जो बोलते हैं, उनके साथ जो लोग लगे हुए हैं, जो काम करते हैं, वो बढ़ता है. तो जो फॉर्मल सेक्टर है ये हमेशा पहले आगे बढ़ेगा, ये साथ में अपने इनफॉर्मल सेक्टर को लेके चलेगा. सो मेरे ख्याल से फॉर्मल सेक्टर इंडिया में ऑलरेडी अच्छा कर रहा है. द सेकेंड पार्ट इज द इनफॉर्मल सेक्टर. तो मेरे ख्याल से अभी ये समय आया है कि इनफॉर्मल सेक्टर हैज स्टार्टेड टू शो ग्रीन शूट्स. एंड थर्ड इज द रूरल सेक्टर. तो रूरल सेक्टर मेरे हिसाब से अभी भी गवर्नमेंट का सपोर्ट चाहिए. वी आर इन द इलेक्शन ईयर, मोस्टली गवर्नमेंट विल कंटिन्यू टू सपोर्ट द रूरल सेक्टर. ओवरऑल टर्म्स ऑफ ट्रेड रूरल सेक्टर के इम्प्रूव हो रहे हैं क्योंकि फर्टिलाइजर प्राइजेस द इनपुट प्राइजेस दे ऑल कमिंग डाउन. सो रूरल सेक्टर आगे एक साल अच्छा दिख रहा है. तो मेरे हिसाब से धीरे धीरे डिमांड कंडीशंस जो के शेप थी वो नॉर्मलाइज होगी. अगर वो नॉर्मलाइज होगी तो आपका जो सरप्लस है वो शिफ्ट होगा. इन सब में एक ही रिस्क है. ये रिस्क है कि गवर्नमेंट अगर अभी भी अपना एक्सपेंडिचर उसी पेस पे रखे जो कोविड के टाइम पे चल रहा था, तब प्रॉब्लम है. बिकॉज अगर सभी खर्चा करने लग जाएंगे तो इकोनॉमी में अचानक से एक्सेस डिमांड आ जाएगी और फिर मैक्रो इश्यूज फिर से शुरू हो जाएगा. तो बहुत इंपॉर्टेंट है इस समय कि गवर्नमेंट के फिजिकल डेफिसिट्स कम हो, बिकॉज प्राइवेट सेक्टर ग्रोथ इज बैक, प्राइवेट क्रेडिट ग्रोथ इज बैक, राइट. सो गवर्नमेंट का फिजिकल इस समय कम होना बहुत जरूरी है मेरे हिसाब से.
जनरली हम कंटिन्यूइंग विद द डिमांड एंड सेम पार्ट कि डिमांड के साथ पिछले 1.5-2 साल में जहाँ जहाँ डिमांड वर्ड का यूज़ हुआ है उसके आगे एक पेंटअप लगा हुआ है कि एवरी पार्ट ऑफ डिमांड इज पेंटअप डिमांड. तो ये डिमांड सस्टेन कैसे होगी, इसलिए पूछ रहा हूँ कि इक्विटी वाला बोलता है कि हर महीना 13,000 करोड़ रिटेल डालता है एसआईपी में. बैंक लास्ट 2-3 क्वार्टर से बोल रहे हैं मेरा क्रेडिट ग्रोथ बढ़ रहा है तो ओनली बिकॉज ऑफ रिटेल. तो और रिटेल की ऑन द ग्राउंड इनकम कुछ आउट ऑफ द वे बढ़ नहीं रही है. तो ये रिटेल एक ही टाइम पे दोनों कैसे झेल पाएगा कि एसआईपी भी चलाता रहूं और ब्याज के दर भी बढ़ा रहूं.
सो ये जो एसेट एलोकेशन और जो इकोनॉमिक साइकिल है ना, ये एसेट एलोकेशन बहुत इंपॉर्टेंट चीज़ है कि आप किस समय इकोनॉमी में क्या चीज़ की डिमांड है और कहाँ पे आप पैसा दे रहे हैं. अभी इक्विटी की जो साइकिल है लास्ट 2 साल में ऐसा था कि एक्टिविटी लेवल्स कम थी, इकोनॉमी में इन्वेस्टमेंट डिमांड भी कम थी, क्रेडिट ग्रोथ भी कम थी. नॉर्मली हम देखते हैं जैसे ही क्रेडिट ग्रोथ बढ़ती है डिपॉजिट रेट बढ़ते हैं, अपने आप एसेट एलोकेशन चेंज होता है. लोगों को लगने लगता है कि अब मुझे डेट में पैसा डालना चाहिए बिकॉज मेरा डेट में रेट ऑफ इंटरेस्ट बढ़ गया है. सो आई थिंक ये जो आपने देखा है लास्ट 2 साल से ट्रेंड की केवल इक्विटी में पैसा जा रहा था, मेरे ख्याल से ये ट्रेंड चेंज होने वाला है क्योंकि डेट इज़ नॉट लेस अट्रैक्टिव देन इक्विटी. अगर मैं वैल्यूएशन की बात करूं तो शायद डेट इज़ मोर अट्रैक्टिव फ्रॉम अ वैल्यूएशन पॉइंट ऑफ व्यू देन इक्विटी. सो ये स्टेबलाइजिंग फैक्टर्स है इकोनॉमी में, और इस स्टेबलाइजिंग फैक्टर्स के हिसाब से अगर बैंक को डिपॉजिट ग्रोथ चाहिए तो शायद वो 7-7.5-8% का ब्याज दर देंगे, और वो ब्याज दर देंगे तो अपने आप देखेंगे कि साइकिल में जो इक्विटी का फ्लो था वो थोड़ा बैंक में शिफ्ट होगा. तो ये रोटेशन एसेट एलोकेशन का इकोनॉमी को रोल करने में हेल्प करेगा.
Sorry, I'm continuing to speak in English because I cannot speak in Hindi for nuts, okay? I just want to add, what matters for growth is total savings. Meaning, if that money comes as equity or whether it comes through a bank loan, it doesn't matter. As long as the total saving is maintained, okay, or increased, that will lead to further growth. So, assuming that we save the same amount of money, then how can we increase growth? You have to increase growth because incomes go up. Because if you save 30% of your money, your income goes up, that same 30% will become a larger amount. So, first thing to fix for future growth is more growth today. So you need that. That's why growth is a momentum thing. When growth comes, savings go up. If savings goes up, further growth comes, and so on and so forth. So one solution for where will we see growth is from growth itself. The second is this point that Manish also made a little bit about government deficits. The government today takes out 11% of GDP to fund its deficits. This is center plus states put together, a little bit more than 11%. This number used to be closer to 7% pre-COVID. The total financial savings of households in India is about 11% of GDP. Of households, not including corporate sector, household sector. Household sector saves in two forms. Fixed assets like real estate and small businesses investing in, non-corporate businesses investing in. That's 10% of GDP. Another 10% of GDP, I'm rounding it off, is financial savings. Which means at a macro level, all financial savings of all of us sitting here goes only to fund the government of India and states. Where are corporates going to get the money to grow? Of course, corporates are also getting money from retained earnings, their own profits. If you need to kickstart growth, if you need to really kickstart growth in the next cycle, government deficit has to come down, and that makes, say, household savings also available to corporates. No, it's not 1:1. It is not that I'm taking all of my money, putting into a bank, bank goes to, no. It is all, these are all aggregated, right? So we all invest, we invest in mutual funds, we invest in banks, we invest in NPS and so many other places. But at an aggregate level, the government is taking a very large share of our savings. Last year and the year before, and the year before, 2021, 2020, 2019, the RBI tried to fill the gap by doing what's called open market operations. They were monetizing the deficit. So instead of the government of India borrowing from you and me, the RBI was lending to them. But that works for a short period of time, and then it creates inflation. We have now reached that point where the RBI can no longer monetize the deficit. So the only way that we can get the next stage of growth, responsible growth without high inflation, is if the deficits come down. So I think if the deficits come down in the next 2 to 3 years, we will be seeing a massive growth cycle in this country.
As you're talking of deficits, I think 1.5 months down the line, all the talks will start on deficits only. So in that context, what is your expectation, Shiva, first, on the borrowing numbers? We are more used to 9 to 10 lakh crores pre-COVID era. Now we are forced to get used to 16 to 18 lakh crores, which is a massive number. So this number will go up, come down, or stay same?
More or less stay stable. I don't think we have had a situation in India where the actual rupee paisa deficit number or the borrowing number ever comes down. What happens is percentage of GDP goes down because the GDP keeps increasing and the government tries to maintain the deficit at a certain fixed number. So my expectation is no different. I don't think the government will reduce the deficit or the borrowing. They will rely on GDP increase to show a decrease in the percentage borrowing.
मनीष, अगर borrowing इतना सारा करना है and इतने कम समय में इतना borrowing हो गया, तो इन्वेस्टमेंट छोड़ो, जो कॉर्पोरेट को उसका कैपेसिटी ऐड करना है या कैपेसिटी एक्सपेंड करना है, शुड ही वेट ऑन कि जस्ट लास्ट 2 साल का एक्सेल शीट है उसको खींच लो और वही डिमांड चलती रहेगी? आप क्रेडिट ज़्यादा देखते हो, इसके लिए मैं आपको पूछ रहा हूँ कि फ्रॉम अ क्रेडिट स्टैंड पॉइंट, वुड यू लाइक अ कॉर्पोरेट हु इज पुटिंग इन कैपेसिटी एक्सपेंशन टुडे, और वुड यू वेट हिम टू यूटिलाइज हिज कैश फ्लोज बेटर?
The way I look at it is that, as I said, government has to necessarily, let the deficits come down. And corporates, normally invest with a thought process की demand कैसी है. ये सब factors corporates के लिए थोड़ा late flow करते हैं. वो इस समय deficits देख के invest नहीं करेंगे. What they look at is कि interest rates उनके लिए अभी कैसा है. So at this point of time, I don't think interest rates is excessive for the corporates to not invest. But if I have to draw this in the next 2-3 years, अगर मैं 2-3 साल आगे जाके देखूं कि अगर ऐसा ही चलता रहा कि गवर्नमेंट का डेफिसिट्स जो अभी 6.4 पे है, आइडियली आई वुड हैव एक्सपेक्टेड दिस ईयर द गवर्नमेंट रेवेन्यू इज फिनोमिनली वेल. मतलब एक सिंपल फिगर देता हूँ, लास्ट 3 साल कोविड साल मिला के अपनी जो नॉमिनल ग्रोथ है कंट्री की, दैट इज 10% CAGR. मतलब कोविड के टाइम पे तो मतलब रियल ग्रोथ नेगेटिव थी, बट उसके बाद भी वी हैव बीन एबल टू हैव अ नॉमिनल ग्रोथ ऑफ 10% CAGR. Government tax collection has been 15% CAGR. I have not seen such a good tax collection ever by the government, which is a very, very positive point. But at the same time, when you have such good tax collection, you should allow your expenditures also to reduce so that you can consolidate the fiscal position. अपने fiscal deficits कम होना चाहिए. So मेरे हिसाब से if you ideally ask me कि अगले साल का fiscal deficit number क्या आना चाहिए, मेरे ख्याल से 5.5 के नीचे आना चाहिए, तभी अच्छा है. अगर 5.8-6% के आसपास आएगा तो होगा क्या कि फिर जैसे सौरभ ने कहा कि बॉन्ड्स कौन खरीदेगा. अगर गवर्नमेंट इतना ज़्यादा बॉन्ड इशुएंस करने वाली है, प्राइवेट सेक्टर को भी पैसा चाहिए, तो इतनी सेविंग्स आएगी कहाँ से. सो दैट विल अननेसेसरीली क्रिएट अ हायर थ्रेशोल्ड फॉर कॉर्पोरेट्स टू इन्वेस्ट. और अगर कॉर्पोरेट्स को थ्रेशोल्ड इन्वेस्ट करने के लिए ऊपर हो गया, और IRRs तो जो डिमांड सिनेरियो है उसी पे बेस्ड रहते हैं, सो दैट विल मेक इट ऑल द मोर डिफिकल्ट फॉर कॉर्पोरेट्स टू इन्वेस्ट. वो जो क्राउडिंग आउट की बात होती है ना, वो क्राउडिंग आउट होना शुरू हो जाएगा. सो वो अवॉइड होना चाहिए.
लास्ट 1 साल तो हम थोड़े बच गए थे क्योंकि बैंकों ने लेंड ही नहीं किया था, बट आज एयरपोर्ट, गुवाहाटी एयरपोर्ट से सिटी आओ तो बैंक का होर्डिंग सेम है, सेम बैंक का ही होर्डिंग है, बट सिर्फ कंटेंट चेंज हो गया कि हमारे होम लोन रेट्स पहले अच्छे थे, अभी डिपॉजिट रेट्स अच्छे हो गए. तो अगर बैंक का डिपॉजिट रेट्स ऊपर हैं, गवर्नमेंट का बोरोइंग कॉस्ट ऊपर है, तो जगह कहाँ है for an individual like you and me to go out and consume, and how will it impact for a state also who also have a very huge borrowing numbers?
So सौरभ, इसको इस ढंग से देखना चाहिए कि क्या हमारी इनकम ग्रोथ अच्छी हो रही है. इंटरेस्ट रेट्स, इन्फ्लेशन, ग्रोथ, ये सब लिंक्ड आइटम्स हैं. आज के दिन अगर मेरी सैलरी ग्रोथ 10 या 15% है और उसके कारण अगर मेरे को लगता है कि इंटरेस्ट रेट अगर 7%, 8% है, सो दैट ग्रोथ इज़ गुड इनफ, राइट. आई विल बी एबल टू कंज्यूम विद दैट ग्रोथ. बट अगर मेरी सैलरी ग्रोथ अगर 5% ही है और मेरे को लगता है इन्फ्लेशन 6% है या फिर आपका इंटरेस्ट रेट 7% है, तो मुझे लगेगा मैं खर्चा करने के लिए पैसे कहाँ हैं. सो इन नॉमिनल जो टर्म्स में चीज़ें चेंज हुई है ओवर द लास्ट 3 years, नॉमिनली हर चीज़ के दाम बढ़ गए हैं. इवन सैलरी ग्रोथ नॉमिनली बहुत अच्छी है. कॉर्पोरेट सैलरी ग्रोथ, इनफॉर्मल सेक्टर में ऑफकोर्स सैलरी ग्रोथ उतनी अच्छी नहीं हुई है, लेकिन कॉर्पोरेट सेक्टर, फॉर्मल सेक्टर की सैलरी ग्रोथ बहुत अच्छी हुई है. सो वो जो डिमांड क्रिएट हो रही है, वो डिमांड आगे बढ़ सकती है अगर एवरीथिंग एल्स इज़ इन ऑर्डर. बट क्या ऐसा हो सकता है, सिनेरियो हो सकता है कि चीज़ें सही ना हो, चीज़ें सही ना भी हो सकती है, ऐसा प्रोबेबिलिस्टिक है. सो जो सौरभ का क्वेश्चन है कि आपके पास पैसे होंगे खर्च करने के लिए, अगर इकॉनमी में इनकम ग्रोथ रही, जीडीपी ग्रोथ रही, तो पैसे रहेंगे ही. और जीडीपी ग्रोथ के लिए वी हैव टू लेट द मैक्रो बी इन प्लेस. हम मैक्रो को डिस्टर्ब नहीं कर सकते. इसीलिए एक्सेसिव इंटरेस्ट रेट हाइक से भी कंजम्पशन डाउन होता है. कोई पूछेगा कि सेविंग्स चाहिए, तो क्या मैं एक्सेसिव इंटरेस्ट रेट हाइक कर दूं ताकि सबके सब मतलब पैसा सेविंग्स में आ जाए? अगर वैसा कर दिया तो अभी कंजम्पशन डिमांड कम होगी, बिकॉज मॉर्गेज रेट बढ़ जाएंगे तो कोई हाउसिंग लोन नहीं लेगा. सो आपको अननेसेसरली इंटरेस्ट रेट भी हाइक नहीं करना है. आज के दिन में मेरे ख्याल से वी आर स्टिल एट अ बैलेंस्ड इकोनॉमी. आई एम नॉट टू नेगेटिव ऑन द इकोनॉमी एट दिस पॉइंट ऑफ टाइम. I think whatever numbers I see in terms of economic activity, they are all very good right now. Can they continue the next 1 year? If the policies are right, I think they can.
स्टेज से नीचे उतरेंगे तो सब पकड़ पकड़ के मारेंगे कि ब्याज के दर ऊपर जा रहे हैं कि नीचे जा रहे हैं. इतना ही पूछा है, ज़्यादा नहीं पूछा है. तो यहाँ से ब्याज के दर कहाँ जा रहे हैं? मैं हिंदी में लिखने की कोशिश कर रहा था तो टाइपो आ रहा था ब्याज से डर. तो इसके लिए मैंने इंग्लिश कर दिया कि ब्याज के दर. सो फ्रॉम ऑल व्हाट वी सेड, व्हाट वी अंडरस्टैंड इज इंटरेस्ट रेट्स एज 4 layers. एट द बॉटम यू हैव रेपो रेट, उसके ऊपर वेयर गवर्नमेंट बोरोस, उसके ऊपर वेयर कॉर्पोरेट बोरोस, उसके ऊपर वेयर यू एंड मी बोरो. As we know, the repo rate is somewhere getting on a plateau stage. So that is an easier answer. Government yields, my ex-boss, I think he's here, he always used to say कि इंडिया में 6 से 9 के बीच में 10 year होते हैं, तो इतना क्या सोचना है. एंड coincidentally आज exactly हम बीच पे हैं, 7.25 के आसपास. What is the outlook from here, from government yield perspective? The same question is on your phones also, so please do answer that as a poll. And this is for you, Shiva, at 7/4, 7:30 on 10 year. Where is this layer of interest rates going? Same range? And we want a little medium term view.
Yeah, much of the same, I think, because the key driver, what has pushed up interest rates over the last 12, 18 months, yields on long-term G6, is the change in inflation expectations. What many people don't know is between 2015 to 2019, thanks to a combination of low oil prices, currency was okay, we had almost 4% CPI, average for 3-4 years. So we all got used to thinking that, okay, maybe inflation is in India will stabilize close to 4. Then COVID happened. We thought maybe inflation in India will be further lower than that only now, because globally expectations of inflation fell. Some of you may remember oil traded at negative in March of 2020. Interest rates, yields came down very sharply. If we all believe, everybody here, the 100, 200 of us here, all of us, if we believe that inflation is going to be 4% per annum for the next 10 years, we'll all be happy to buy Indian G6 at 6, because we're going to get 2% better than inflation. But we don't believe that anymore. The RBI has been talking about keeping interest rates below 6%. That 4 is gone, it's history. Which means we have to adjust ourselves. Maybe it is not 4, maybe it is 5.5 that we have to expect for average. If you're going to get 5.5, then I need 7, 7.5. which is where we are. So unless there is a psyche change or is a policy change from RBI or all of us, that there is a significant shift. Now, I don't think we'll breach 6. So upside risk, it's not that 10-year GSEC in India is going to be 8 or higher. But for the yield to drop below 7 and substantially below 7, all of us and the other 120 crore, 140 crore people in this country need to believe that inflation is going to drop and stay low for the next 10 years, which is, I think, a very difficult situation today. So my expectation for the next 1 to 3 years is more of the same, maybe slight softening if we are lucky, but don't expect anything significant. But herein lies the opportunity. We have experienced so much volatility over the last 3-5 years on various parts of the bond markets. Thanks to COVID, thanks to the NBFC crisis, 2018-19. We've seen interest rates, yields go all over the place. I think I'll be very happy if we have the next 3 to 5 years where things are more stable. And if we all see stability, then we'll all be very happy earning that 7-8% yield for the next 3 to 5 years.
Everybody likes predictability, be it personal life or markets. Well, अगर GSEC stable है तो corporate bond पे मनीष कुछ because सब कुछ stable रहेगा तो मज़ा नहीं आएगा.
So जो इकोनॉमिक एक्टिविटी है और जो स्प्रेड होते हैं बिटवीन रेपो रेट एंड से 10-year GSEC और GSEC एंड AAA corporate bond, AAA and AA corporate bond, they all related to what is the level of economic activity. अगर level of economic activity अच्छी रहेगी तो spreads ज़्यादा होंगे and people will be okay to give that spreads as well. आज के दिन में the problem I see is that the yield curve is very flat. Yield curve मतलब 1-year segment maturity कहाँ trade हो रहा है, 10-year segment कहाँ trade हो रहा है. फ्लैट यील्ड कर्व कब होता है? फ्लैट यील्ड कर्व होता है जब मतलब रेट ऑफ इंटरेस्ट एक पीक पे चले जाते हैं. मेरे हिसाब से वी आर इन अ स्टेबल इंटरेस्ट रेट एनवायरनमेंट विद अ गुड इकोनॉमिक ग्रोथ. अगर इकोनॉमिक ग्रोथ अच्छी रही तो शायद आगे जाके ब्याज दर शायद और ज़्यादा हो सकते हैं. इस साल नहीं, अगले साल नहीं, शायद तीसरे साल, चौथे साल. तो अगर 10 साल का बॉन्ड ले रहे हैं तो उसमें टर्म प्रीमियम थोड़ा ज़्यादा मिलना चाहिए. सो मेरे ख्याल से एक तो ये कर्व बहुत ज़्यादा फ्लैट है. दूसरा, जो कॉर्पोरेट बॉन्ड के स्प्रेड्स हैं आज के दिन में AAA के, ये बहुत ज़्यादा कम हैं ओवर GSEC. मेरे ख्याल से ये सब की प्राइसिंग चेंज होगी बिकॉज जब इकोनॉमिक एक्टिविटी होती है, लोग आके बोरो करते हैं तो उसकी प्राइसिंग भी चेंज होती है. बैंक्स का MCLR जैसे सौरभ ने कहा, राइट, बैंक का क्रेडिट ग्रोथ है तो बैंक शुड बी ओके टू इंक्रीज दी MCLR एंड बोरोअर्स शुड ऑल्सो बी ओके टू गिव हिम एक्स्ट्रा MCLR. सो ये जो स्प्रेड्स हैं, वाइल ही सेइंग रेपो रेट 6.5 है, 6.5 पे अगर रेपो रेट स्टेबलाइज भी हो जाता है, सो बाकी जो चीज़ें हैं ये चीज़ें थोड़ी थोड़ी एक्सपैंड करेगी विद ग्रोथ. और इन्वेस्टर्स के लिए अच्छा है बिकॉज अगर कॉर्पोरेट बॉन्ड AAA आज के दिन 0 है तो यू आर नॉट गेटिंग एनीथिंग बाय इन्वेस्टिंग इन कॉर्पोरेट बॉन्ड्स AAA. बट इफ़ यू स्टार्ट टू गेटिंग अ बेटर प्राइस, इट विल बी गुड फॉर द इन्वेस्टर्स. सो आई थिंक वो जो दूसरी लेयर की आप बात कर रहे हैं, ये दूसरा लेयर अभी वो पड़ाव आ गया है जब ये दूसरे लेयर्स एक्सपैंड करना शुरू करेंगे.
सो लॉन्ग एंड GSEC कर्व स्टेबल है, कॉर्पोरेट बॉन्ड में स्प्रेड्स नहीं है. एक अजीब सा पजल है मार्केट में, पूरा पैसा जा रहा है टारगेट मैच्योरिटी में, जहाँ पे पता नहीं क्या उसमें इतना रखा है. सो फ्रॉम बोथ ऑफ यू टू कंक्लूड माय पार्ट ऑफ क्वेश्चंस, any first 2 products what you would ideally say avoid this for now, and 2 products or categories this is what to look at. Elimination first and then the
don't keep cash idle. We have seen among one of the sharpest set of rate increases over the last, yields have gone up for last 1.5 years, interest rates have gone up significantly since April this year. When you look at bond market returns, they don't look very inspiring, maybe 3-4% for the last 1-2 years because of the NAV performance of mutual funds and other, if you look at bond indices. But if you go back 2 years ago and look at an FD rate, they were also 3-4%. Which means in one of the worst periods of rising rates and stress in terms of increases in rates, the bond market has given you as good as cash. So first thing is, if you have fixed income allocation, get invested. Don't sit in cash. Cash meaning short-term, very liquid, overnight type of thing. Please get invested. First things first. Get invested. If we can go through one of the toughest periods and still manage to give cash-like returns, then going forward things are going to get better. At least that's my view. So what is to avoid is really sitting on all your idle money. I think should be avoided. The second thing, I think, going back to what Manish said, the spreads on corporate bonds are too low. This is for two reasons. One is corporates are just starting the borrowing cycle. The second is government is borrowing as much as they want. So, government yields have gone up first. So that creates both an opportunity as well as an avoiding. Avoiding is, maybe you might want to wait for some time before you increase substantial allocation to corporate bonds, because I think future will give you more yield there. And if you don't want to take that call and leave it to fund managers, I'm happy with that. But if you are making that call on your own, I would say start with G-Secs first and figure out corporate bonds over a period of time. G-Secs, I think, are a great opportunity across the yield curve. I know the yield curve is completely flat, but today, Government of India is giving you close to 7.4% give or take on 30-year, 40-year G-Secs. If you really want to sort of build a long-term kitty, which is just like an annuity type of a thing, I think it's fantastic to have a certain part of your money really long-term, locked away at these kind of rates. I think as we become more and more developed, these 30-year, 40-year G-Secs yields will be substantially lower in 10 years, 20 years, 30 years time. And so if you have that kind of horizon, long-term horizon, as and when yields on those bonds are at these levels, 7.5 and above, we should look to at least have some allocation locked up for long-term. This is a completely contrarian view, I know, from the industry. I think there is an opportunity to be in very long bonds. Just as think of it like this, target maturity funds. How many of you have invested in FMPs? I think everybody has. FMPs, target maturity, etc. What happens at the end of that period? Or for that matter, an FD. What happens at the maturity? You buy another one. You buy a 3-year target maturity fund. At the end of 3 years, you'll buy another target maturity fund, and so on and so forth. Your money is long-term. Your money is there for 10 years, 15 years, 20 years. But you buy 3-year FD, 2-year FD, etc. because that's what the relationship manager told you, or that's what the product which was appearing in some thing. But the money is long-term. If the money is long-term, invest long-term. And then forget it. Just like we have as an industry and all investors, we have figured out that in equity, investments is for long term. And let your SIPs continue, let your investment, even if the market falls, we'll top up. The same approach we need to have in debt. There's an allocation, and if the market falls, like it has fallen over the last 1.5 years, top up. Because this is a much better opportunity than any time in the last 2 years to get deployed.
The way I would look at allocation of asset is that what Saurabh said, India is a 6 to 9% GSEC market. Agar aapko GSEC 7 to 8% range mein, I think it's an average return. What Shiva said, from that perspective, aapko agar 10 saal, 20 saal ke liye lock karna hai, it's not a bad return, it's an average return. But I would invest in that segment only when I get 8 to 9%. बिकॉज वहाँ पे मेरा लॉक इन जो होता है ना, वो एक काफ़ी अच्छे इंटरेस्ट रेट पे लॉक इन होता है. इस समय मेरा ऐसा मानना है कि जो शॉर्ट ड्यूरेशन प्रोडक्ट्स हैं, वो शॉर्ट ड्यूरेशन प्रोडक्ट्स बहुत अच्छे सूटेड हैं. आरबीआई का भी इंटरेस्ट रेट साइकिल जैसे मैंने बताया था, एक होता है एकोमोडेटिव साइकिल, एक होता है न्यूट्रल साइकिल, एक होता है टाइटनिंग साइकिल, राइट. अभी हम न्यूट्रल साइकिल पे हैं. न्यूट्रल साइकिल को जब खेलना है तो आप शॉर्ट ड्यूरेशन से खेलिए. और सबसे इंपॉर्टेंट है, क्रेडिट साइकिल बहुत अच्छी है, ग्रोथ बहुत अच्छी है. ट्राई टू गेट बेस्ट इन टर्म्स ऑफ YTM फॉर यू, right? And I think in the coming months, your YTMs of products will improve even further as corporate bond yields move up, as AA segment, as single A segment starts to give you much higher returns. So I think that category of fund is what I would advise investors to be. The day RBI says I'm tightening interest rates, the day you think that 10-year GSEC is at 8 to 9%, I would go for a long duration. So the best way I think investors should allocate fund is through funds which have the ability to ride all kinds of cycles, where while target maturity is good from simplicity perspective, but I think funds which can allocate money in different cycles differently, I think they outperform every kind of fund by miles. So my thought process is invest in funds which can do different things for you in different market cycles, and therefore give you the best of all market cycles. And according to me, the current market cycle is about short duration, high YTM.
Thanks, Manish. You stay on, Manish. Shiva, I'd like to thank you because you have a flight to catch. Thank you so much. Thank you. I thought I covered most of the questions. Still, if I have left anything unanswered, happy to take any questions from Manish.
Good afternoon, sir. My name is Lohit Poddar. When we talk about interest rate and inflation, we always consider gold as a...
Sorry, I can't hear you. This is also not working.
Hello.
Sir, when we talk about interest rate and inflation, we always consider gold as a very good investment for the hedge against inflation. And recently, government has introduced EGR, electronic gold receipt, which we can actually trade in stock exchange. So how do you see this as an investment? And the main confusing part for us is to know that the price of the EGR, would it be based on the demand and supply of EGR, or would it take the physical gold also into account to actually, so I am really confused that how the price of EGR would be shaped. So, and how it would work against inflation. Whether it would be a similar investment like as we invest in physical gold, or it would give investor a different way of perspective.
So I think in the current environment, our house view is that we are very positive on both gold and silver. We gave a positive call on silver almost 3-4 months back. And over the last 6 months, we've been given, positive call on gold. We do it through a number of products which we have, at ICICI, the multi-asset fund, the asset allocator fund, the passive multi-asset fund of fund. We have gold ETF, we have silver ETF. Why I think, gold and silver both are, so very appealing at this point of time is, gold is largely an anti-dollar asset. और आप जिस ढंग से डॉलर की साइकिल देखेंगे लास्ट 10 से 12 साल हैज़ बीन अ पॉजिटिव डॉलर साइकिल ये द यूएस इकॉनमी हैज़ डन एक्सेप्शनली वेल इन द लास्ट 10 years. I think that long US cycle is ending and we will have a weak dollar cycle over the course of the next few years. So if somebody has to invest in that environment, right, the best way to get it is either invest in emerging markets or invest in gold or silver. And between gold and silver, of course, 3 months back, silver, looked very, very cheap from, pure relative pricing perspective. But, even now, I think both gold and silver are good investments from that perspective. On your question of, EGR, I haven't studied EGR completely. But I think there are vehicles available to invest in gold. I think ETF is a great vehicle. Government has come up with a gold, bond scheme. That's also a good vehicle if you want to invest for a long period of time. Or you can invest through, asset allocation funds, which mutual funds have. I think asset allocation is the key. For us, the next theme for 2023 is about asset allocation. It's not about, pure equity. I think as interest rates go up, and globally, I think the scene is very different now than what we have seen over the last, several years. Some of the equity panelists have spoken about this, that, when interest rates is very low, you only see asset prices getting inflated. Now, I think globally we have come to a point where possibly we may not see, such low interest rates. Central banks would think again to come up with QEs. All of that, what has happened in the last 10, 12 years may not happen again in the next 5 to 10 years. So therefore, asset allocation perspective has to be very clear in your minds. And I think asset allocation funds are the key for you to invest in 2023. So that's my, limited submission.
Thank you, Saurav sir, and our esteemed panelists for this interesting session. Saurav sir, thank you for moderating this session. There could have been no one better than you for this. I would now like to call upon Dr. Arun Verma and Mr. Kanhaiya Lal Agarwala for felicitating our esteemed panelists. And Saurav sir.
So before we end, sort of just a lasting comment, I thought I should convey this because we've had a very long discussion on, fixed income. I think fixed income is an important asset class in portfolio allocation. I just met Pallav, outside, and you all know Pallav, and I have, known him for a long period of time. Pallav was talking to his relative why he recommended debt a year back and why asset allocation is important. I think asset allocation is the key for your portfolio management. When you are an investor, when you are an advisor, what you do out of asset allocation, at what point of time you invest in, which asset class is very important. And if I have to look at the next 1 to 2 years, I think fixed income as an asset class has really come up, for investors. And when we have this kind of a cycle where rates are where they are, I don't think there's too much of difference between fixed income and an equity return. But risk in fixed income is much less and uncertainty in fixed income is very low. So I think fixed income is the asset class, I think, for the next 2 years for investors. Thank you so much.
Thank you, sir. Thank you. A very famous investor once said, "Risk comes from not knowing what you are doing." But courtesy these wonderful sessions, we will now be more watchful and cognizant of the possible risk we may face tomorrow and take the plunge with our eyes open. This brings us to the end of session 1 of Sapient Conversations 8.0. A tasty lunch now awaits you. Thank you. Hope to see you all in the next session. Till then, keep the conversations going.